Can a business owner use company funds for personal use? This is a question that Noelle gets asked all the time, and the answer will really surprise you. In this video, I'm going to share with you if you can do it, if you can, how you can. Let's go.
Noelle. Yeah, she can fix that. You gotta get it done, no, you need to do it better. Well, she can fix that. Yeah, she can fix that. Investment to get back, trying to get a big stack. She can fix that. Let's fix that.
In this episode, I'm going to answer this question straight up and give you no fluff. I'm also going to share with you how you would do it so that you don't get into big trouble. And last but not least, I'm going to share with you the major things that you can never do if you don't want to get your business shut down. One of the major benefits of being an entrepreneur and owning a business is that you get to control your time, you get to run your business, and you get to make most of the decisions. So one of the questions that Noelle gets asked all the time is, are we able to use our business's funds, our company funds, for our own personal use? Well, I'm going to give you a deep dive on how you can, because in some instances you actually can. For the most part, the answer is no, but there are definitely some instances where you can, and there's some clever ways that I'm going to give you that you can so that you don't get into trouble. So let me explain. Obviously, each business is created for a business purpose. So when you actually got your business registered with the Secretary of State and you actually got an EIN, an employer identification number, and all of those different things, you actually certify that you were creating a business for a business purpose. That's literally one of the things you have to certify to when you get an EIN, or employer identification number. So if you have an actual business that's registered with the Secretary of State, you probably really need to stay in some of these guidelines, but there are some things that you can do so that you can actually pull money from your business to support yourself and your life. One of the things that you want to make sure that you do is actually separating yourself from your business. That's actually the primary reason why you probably started a business and why you actually got the business registered with the Secretary of State. Let me explain. When you go to the Secretary of State and you file for your LLC, your limited liability company, just using that entity as an example, you have actually created a separate entity. This entity is separate from yourself, which is one of the benefits. So if you are ever sued, for example, if there's a lawsuit, or if someone tries to come after you legally, you actually have a business entity, and much of the business that you do, they would have to go after that business entity, and that creates protection for you and your personal assets. So one of the things that you don't want to do is actually break that veil. There's actually a term called the veil of the business, and that means it creates this thin layer between you and your business, and it protects you. So if you have a business entity, an LLC, for example, one of the things that you want to make sure is that you create a real entity. You got it registered with the Secretary of State. You got an EIN, which is like your business's social security number. And another thing you want to do is get a business checking account. If you get a business checking account and you put all of the funds for your business in that checking account, those funds are protected from your personal savings and your personal assets. This way, you actually have two separate entities, and in fact, you literally could borrow money in your name, your social security number, put it on your personal credit report, and you could create a business credit profile and start borrowing money in your business's name and having it be its own entity that can borrow money, that can lend other people money, and that can operate on its own even if you passed away. So think about that, for example. If you actually have a real business, it is an entity that could surpass you. It could be passed on to other people. You could sell it. You could will it to your children, things of that nature. But if you and your business are completely intertwined, you don't have that ability to do that. So you want to be really careful. So let's talk about how you do it. Pay yourself. So instead of taking money out of your business checking account, for example, to pay your bills or to buy you something, you could actually just take the money from the business and pay yourself and then buy those items. That is going to be the safest and easiest way for you to not start commingling your funds. You do not want to start putting your personal funds into your business checking account or vice versa. However, you can actually just pay yourself. You literally, if you have a business checking account, get a checkbook and write a check to yourself and pay yourself. Then put that money in your personal account and then buy or pay for whatever personal needs you have. This could prevent you from doing things that could put your business in jeopardy. File your taxes. Another amazing thing that you can do with having a business is, of course, file taxes for your business and start writing off of your business expenses and write off the different deductions. The United States government actually has so many advantages for businesses. It's almost like America was built for corporations and businesses. You've heard that. There are so many advantages in the tax system of having a business that you want to take advantage of. So keeping your records of what you're spending on in your business and literally just paying yourself from your business will actually provide you with more tax deductions, more write-offs, and give you less taxes that you have to pay for your business, because businesses are taxed at a much different rate than personal income. Therefore, if you have things that you need to buy personally, you literally can just pay yourself or make it a business expense. Let's talk about that. If, for example, you have a car, you could literally put your car in your business's name, and then the car's expense, the car note, the mileage, different things like that, the maintenance would be covered and be an expense of the business while you are using it for business purposes. This will be a much smarter idea than actually just taking the money from your business and buying yourself a car. You literally could buy the car in your business's name and then have the business pay for the car note, etc., etc. Therefore, you would actually be protecting yourself and creating more deductions and less of a tax liability for yourself. Now, time out. Noelle is not a tax accountant or an attorney, so please check with your own attorney and your tax advisor about all of the different deductions and things that you are allowed to do. Again, this is just me speaking from my personal experience and different things that my accountants have taught me over the years as a successful entrepreneur. Do you have a question for Noelle? Go to asknoelle.net. I love answering your questions, and I love giving you the honest, upfront answer, and even having my team do extra research so that we can give you a complete answer to all of your questions. That's asknoelle.net. Right now, you just fill it out. Let us know who you are. Maybe I'll even have you on camera with me, and you can literally get the answers to all of your questions because I am here to help. That's asknoelle.net. AskNoelle.net. Go there today, ask your questions. The faster you get them in, the faster I can get them answered for you, because I just want to make sure that you have all of the resources, all of the tools, and all of the knowledge that you need to be successful. This is Noelle. To your success.